the question of interest on excess reserves, and I think it's a little bit of a misnomer.
Test. Hi all, and welcome to another edition of What's Moving the Market, FOMC edition by Phillip Konchar for FxPro. I'll just wait for a few more minutes for people to come in and join us, and then we can start this broadcast properly. So I would encourage you to come into the chat area and hopefully ask any questions if you have any, and make it as informal as and sorry, just reading some stuff. Informal, just as informal for everybody. So I'll just wait for a few more minutes, just testing that you can see everything. Excellent. Can you see my screen with FxPro logo? Brilliant. Okay. Hey, Amos. Good to see you again. Excellent. Well done, guys. Thank you for replying.
Very carefully. FOMC's financial vulnerabilities as, quote, moderate.
Okay, I have my squawk on here as well. So as Paul is speaking, if anything kind of happens as a breaking news, that'll come up as well. Okay, while we're waiting for people to come in and join us, very quickly, I'll go through a few of these basic slides, and then we can take it from there. So I didn't want to go that way. Let me just see. Ah, that's the one. Sorry. That's the one. Apologies.
Just stepping away from Powell for a second, some news agencies down reporting White House backs omnibus spending bill. The White House sets back the omnibus spending bill now, contrary to some of the earlier reports we heard in the session.
Okay. Apologies. Just trying to figure this one out. For some reason, it's not showing the full picture.
In terms of asset prices, some areas asset prices are elevated relative to historic norms. As in some areas, asset prices are elevated relative to historic norms.
Don't know what's going on here. Apologies, guys. I'm just using a separate screen. So hopefully, let me just see the audience view. Okay. Now, a very quick risk disclaimer warning. If you've seen any of these webinars before done by anybody else, you know that they all start with a disclaimer. For some reason, it's not loading up completely, but anything that we discuss here is available in a public domain, so therefore it should not be seen as advice for your trading or investing. FxPro are your brokers, and they are non-advisory brokers. They are basically execution-only brokers. So anything that we talk about here is basically opinions. Here we go. Opinions and experience is not advice. This material is for general information only, and it is not intended to provide trading or investment advice. It does not attempt to address your individual circumstances or objectives. Anything that we talk about here is based on information that's available in a public domain, and therefore it does not take into consideration your personal investment or trading objectives. It's for a generic purposes only. I'll remove this for now. For some reason, it's just not loading up as it should. But let's go into the markets, guys. And as I said, let's keep this nice and informal. So, do you want me to cover anything in particular? If you do, come in and ask in the question section. Today, obviously, we have a major economic data event, which is the FOMC, and we have a live statement now by FOMC Powell. So just to summarize before I go into the actual markets and start talking about some levels, and what you're seeing here in front of you now, this is euro dollar. This is cable, this is dollar yen, this is euro sterling, this is Aussie dollar, this in here is dollar CAD, oil, WTI, gold, we have FTSE, in this corner up here is S&P, we have Dow Jones and German 30 or DAX. And from the data point of view, it's quite important for us to say that at 6 o'clock today, these FOMC rate decisions and statements, minutes, are normally released at 7 o'clock UK time in the evening. It's evening time here in cold London. But because of the time difference between the US and the UK, today it was released at 6, and then we had a press conference at 6:30. But to summarize, basically what happened is FOMC decided to hike rates, and that was a unanimous decision. But in their statement, they basically mentioned that it's very likely that they will stick with the 3 further hikes in 2018, and then additional 3 hikes in 2019, and possibly 2 more hikes in 2020. Over the horizon. And basically what they said that jobs have been strong, so job gains have been strong. And the rates of household spending and fixed investments have moderated. They also said that near-term risk to economy appear, quote, roughly balanced, and they basically voted in favor of policy unanimously. They also mentioned that all the other meetings, i.e. May and June going forward, are live meetings, which means that they should be closely watched so that we can see the reaction at that time as well. The initial reaction was that I'll pull this chart straight away. This is a chart for dollar index, and the initial reaction was that we saw a little spike higher in a dollar index, and then subsequently it kind of leveled off. And as the Fed Powell started speaking, because he's speaking now live, that kind of put further pressure in a dollar, because the initial hike would lead us to believe that they should be kind of stronger or bullish for dollar. And what majority of the market participants were anticipating or waiting for was to see more hawkish either action or the statement, possibly indicating to more than 3%, more than 3 hikes in 2018. So therefore 4, but instead they're basically sticking with 3, and that initial reaction, bullish reaction, was reversed, and then we saw a pullback lower. So from the dollar story, very important, very important levels to watch are at this rising trend line here that we are just about to test. So if this candle does break this current lows at 89.30, 89.05, 89 even, that would lead us to believe that this is a bearish reaction, potentially opening up the way for more downside. So basically what bears are waiting for, they're waiting to see for a reaction in this way, potentially opening up the way for the retest of these two previous lows. And what you're seeing here, this is the end of day time frame chart for dollar index, which is, if you don't know, this index is traded as futures, and it's basically following the movement of US dollar against the basket of 6 other currencies, including euro, sterling, Swiss, Japanese yen, Canadian dollar, and Norwegian krona.
US
So
trade wars didn't come up in the FOMC meeting.
Okay, so that'll be basically a bearish reversal and a dip lower. If for whichever reason this selling pressure stops and eases, and then we see a reversal, i.e. a bounce of that rising trend line that we can easily draw here, and a breakout higher, then what dollar bulls are waiting for, they're waiting for a breakout above these current highs at 89, 95, 90 area, so this zone here. And what I'll do is I'll go and color this red so that we know that this is a resistance currently.
Let's once again notice that as the labor market has tightened, we haven't seen wage growth.
So if we
lack of that wage growth.
Excellent. Okay, so if we see a reaction like this, a breakout above this 89, 95, or even 90 level, that would quite likely indicate that bulls are back in the control with the dollar, and then that would potentially open up the way for the retest of these highs up here, which is based on these previous highs at 90.85, and then subsequently to 91.50. So that would translate to a selling pressure in euro dollar, selling pressure in sterling dollar, Aussie dollar, and so on, and then bullish reaction in dollar yen, dollar Swiss, and so on. But so far, this is not the way it's playing out. So keep an eye on this area down here.
Election cycle, it looks at its mandates.
Keep an eye on this area down here. It's really significant.
Focused on the jobs that Congress has assigned.
So what I'll do is I'll color it blue so that we know that this is our support, and I will also color the resistances red up here, so that we know that this is a upside resistance at the moment. But very much bearish reaction to the rate hike, but then subsequently the press conference as well. Okay, so let me just remove this for now and go back into euro dollar and other currency pairs, and then we can also talk about some equity indices, in particular US equity indices. Do you guys want me to cover anything in particular? Is there anything of interest to you at the moment? Are you looking at anything? If you do, just ask, feel free. Amos, you were missed as well. You're more than welcome as well. Okay, so let's talk about euro dollar at the moment, guys. Now, this is the euro dollar in end of day time frame, and we know just by looking at it that euro dollar is uptrending quite nicely. The price action currently is mixed with these two red and blue lines, which is 20 and 50 period moving averages in my on my charts, but also it's creating the sequence of higher highs and higher lows. So from the intraday point of view, or a shorter term point of view, majority of the traders are keeping an eye on this shape.
How done?
Apologies, I'll just remove this. this shaded area down here at 122.16, 121.80, because majority of the people who are looking at this from a longer term point of view, they're seeing this as a potentially a topping formation, which could morph into a triple top. And if that is to play out to the downside, then the price should really dip lower and close below this shaded area here and this rising support trend line. Only if it does that and creates the end of day close below that level, bears are in control, potentially opening up the way for the retest of this deeper downside towards spot 21, spot 20, 60. Alternatively, if this resistance breaks and we see a confirmed breakout above this falling resistance trend line, and the area on the upside, which is capped by 123.47, 123.50, and something like this develops, then that would lead us to believe that a euro is breaking out higher, potentially opening up the way for the retest of any of these upside resistances, which are based on this fairly long-term horizontals, previous highs and lows. So the resistances at the moment are at 123.47, breakouts above that level, 124.10, 124.60, and even 125. From the intraday point of view, you can also see that the initial reaction in euro dollar was to the downside, because dollar strengthened and euro dollar pulled back, and then we saw this massive reversal. And that, as I said, this massive reversal was basically triggered during the Fed press conference, which market participants were kind of closely watching for the level of hawkishness, and the fact that Fed's Powell was saying that we'll stick with 3 rate hikes this year. That's already priced in more or less, and there is no surprise. So closely watched levels at the moment, support by the 122.75, and then below that 122.16, 121.80, capped by this shaded area here at 123.47. Only a daily breakout or end of day breakout above that level would trigger possibly some either stop losses, which are up there, and then you could see a short squeeze and a move higher, or maybe a fresh buy orders above that level. So I'll minimize this for now and keep it in this corner. We are keeping an eye on this at the moment. The next thing that we can talk about is cable, and yet again, let me start in end of day time frame here. What we are seeing for sterling dollar, we are seeing yet again this nicely uptrending market, and the fact that sterling dollar is back above that psychologically important 140 level is indicating sterling strength and US dollar weakness. So if we see this in end of day time frame, majority of the people who are keeping an eye on sterling dollar, they're keeping an eye on these sequence of the slightly lower highs and a breakout up here, which is moving higher. So this breakout is also very significant from the fib point of view, because let me just apply this again. So from this swing high here to this swing time low, that would be equivalent to a 61.8 fib retracement. So the breakout and a daily close above this shaded area here, and the area for that is one spot 40.75, one spot 40.95, indicates to the market participants that bulls are in control here, potentially opening up the way for the retest of this 141.50, and maybe even 142, 143 on the upside. So that would kind of be a continuous bullish run higher. So from the intraday point of view, a very, very similar situation. We do need to see the reaction here, and this was the initial resistance. So if we just remove that and put it up here and make it into a new resistance, and these previous resistances are now going to be considered as a newly found supports down here. So let's see how that plays out at the moment. Okay. Do you need to see this in a shorter term time frame? In an hourly time frame, yet again, you can draw a trend line going this way, which is supporting it. The current price action is creating higher highs and higher lows, and it's trading above multiple moving averages. So 20 period moving average, 50 period moving average, 200 period moving average. And what's even more important, majority of the people who were looking at the cable, they were looking at the existence of this pattern here, which is breaking out to the upside. So this looks like a breakout. So let me just show you what this means. So a breakout, consolidation, breakout, consolidation, and now we are seeing a breakout higher. So we could see a little bit of a sideways consolidation here, or maybe some profit taking for the bulls around that 141.50, 141.70. So a big level to watch is this 141. It's nice and round number, and it'll be closely watched by anybody who is sitting in a bullish camp, because as I said, these were the previous resistances, now they're newly found supports. Let me just minimize this as well for now, and let's go and check out dollar yen. You guys are all very quiet. Do you need me to cover anything in particular? Are you looking at anything yourselves? Is anything of interest? Dollar yen, guys, yet again, very similar situation. We have a continuous selling pressure in dollar yen, which indicates Japanese yen strength and the US dollar weakness. So the levels that majority of the traders are keeping an eye on is down here, where this shaded area is at 106.20, 106. Yet again, very important round numbers. And if I go down to a 4-hourly time frame, you can also see that that area is where the 20 and 50 period moving averages are, and it's also where this previous falling resistance trend line is. So if the price does go back inside of the trading range, let me just remove this for now. Inside of the trading range, it could possibly trigger some interest below that level. So you have this coiling price action, you have a sequence of slightly lower highs, and you have a sequence of slightly higher lows. So that coiling price action is indicative of an energy building, and potentially indicating that if the price breaks to the downside below that 106, then it would open up the way for 105.60, maybe even 105.20, possibly even 105 to the downside. Alternatively, if that level of support holds and we see a breakout, the initial level of resistance would be where this shaded area is at the moment, at 106.80, 107.13 to the upside. Only a breakout above that level and a daily close about that 106.80, 107.13 would open up the way for the retest of this area up here, 107.80, 108.20. Joshua is saying, how about Bitcoin? Well, I don't really think that Bitcoin is really that impacted, but actually I can check by the FOMC, but let me just see. Bitcoin was moving a little bit higher. just under 9,000 at the moment. So let me see. I'll see if I can pull the chart up, and then maybe we can look at that as well. But I'll see if I can have it on the FxPro MT4 first. Okay, so that's dollar yen. The other thing that was moving quite nicely is dollar CAD, and then also gold. And we had earlier on a massive, fairly substantial move in gold as well, ahead of the FOMC and during the FOMC as well. So the topic for today's webinar is really the Federal Reserve rate decision and the way that might impact US dollar currency against a range of other currencies, but also financial markets and instruments which are traded in dollars, like precious metals, like energy commodities, but then also some of the US equity indices as well. Okay, so let me see if I can let me see if we have a Bitcoin here, and then I can pull that, but then I would like to go and cover I would like to cover gold and crude oil because that's moving really nicely now. Okay, let me just go and quickly get the charts here for the Bitcoin. Okay, so since we are talking about Bitcoin, guys, the important level for Bitcoin to hold is at around 7,700. That happens to be a 200 period moving average in daily. Bitcoin is initially capped by 9,336. If we see a confirmed breakout above that 9,336, potentially that could indicate a further breakout towards 10,000, which is a nice and round number, but it also happens to be a 50 period daily moving average, and it also happens to be a falling resistance trend line in that daily time frame. So that's 9,300, 10,000. It's a really big level for Bitcoin. I think that there'll be a substantial amount of selling pressure around that area, because that's where the previous resistances are, that's where the previous highs and lows are. Also, if we see a confirmed breakout, oops, sorry, I'm using the wrong thing. If we see a confirmed breakout above that 10,000 level, we can potentially see a spike higher towards 11,500. So that will be basically a bullish reaction. The end of day close above either 9,300 or 10,000, and a full daily candle closing above that level could possibly target further upside resistances towards 11,000, 11,500. Alternatively, as long as the price stays below that 9,300 or 10,000, bears are in control, and then potentially they would target further downside supports towards 7,700, possibly even towards 7,000, maybe even 6,000, because that's then the trend changed and you have the sequence of lower highs. Also recently we had a big news about the Bitcoin as well, where Israeli exchanges are saying that they won't be listed any cryptocurrency companies on their exchanges. Recently, a couple of days ago, we had Trump, who was actually saying that he'll make it illegal for US citizens to hold Venezuelan cryptocurrency, which is called the Petro, because that's basically bypassing the sanctions, and they can, trade oil in that cryptocurrency and so on. But that's where we are at the moment with the cryptos. But a fairly substantial selling pressure at the moment, around that 9,300 to 10,000 area for Bitcoin, at least traded in US dollars, if I can see it correctly. But I don't have the Bitcoin chart on this MT4 platform here. Okay, great. Any more questions, guys? Do you want to talk about anything else? Let's go and talk about gold and crude oil. Crude oil was actually moving very nicely today as well. And yet again, energy commodities are traded in US dollars. So if dollar is weakening, that's normally seen as kind of fairly bullish for a crude oil. And today we got the actual reading for the inventories for the US crude, which came in as a bigger drawdown than initially anticipated. So the market was anticipating a build in inventories, which is quite bullish for the WTI, or US traded crude oil, and we saw this massive breakout higher. So if you see a crude oil in the daily time frame, you're seeing this massive daily candle, and daily candles which look like that are called mirabuzus, and basically they're just solid candles with no wicks on either side, and they indicate substantial bullishness if they happen to be green. So the fact that it's breaking out above this 65 area, it's quite telling that bulls are in control. And also we have a breakout above this falling resistance trend line here, above this 64.40, 64.14, 63.90. So the fact that price broke above that level is actually confirming the bullishness at the moment. So anybody who is sitting in a bullish camp, they are looking for this zone up here as a major resistance area, or the area of interest for them, and that happens to be, let me just go down into a 4-hourly and I'll show you what that area is. It's at 66, which is nice and round number, followed by 66.30, followed by 66.60 on the upside. The initial downside is supported by 65. A loss of 65 would open up the way for the retest of this zone here, 64.40, 64.14, and so on, because then we have this rising support trend line developing here as well, and we also have this falling previous resistance, now newly found support as well, to reference it as a major support level for crude oil. Okay, so let me just go down to gold, and then we can talk about some US equity indices as well. Okay, gold reacted very bullishly as well, as you can see. Massive reaction higher in gold. We had a couple of levels of resistance towards 1326, 1328, and that's broken now. So really, what all of these previous resistances are now newly found supports, and that's indicating a further US dollar weakness. So going forward, this area up here would be of interest to anybody who is sitting in a bullish camp. So 1338 and 1340, and these previous levels here at 1330, 1334 would be support. So let me just go down to a 4 hourly and show you what I mean by that. Falling resistance trend line sequence of lower highs. FOMC came in, the number caused a US dollar to pull back, and then we saw this big massive breakout higher in gold. So anybody who's sitting in a bullish camp now was referencing this previous resistance as a lovely area that they would be looking at. So 1330, 1332. The fact that price is breaking out higher now is respecting that same breakout level as a newly found support. So if for whichever reason price starts consolidating here for a bit and pulling back to confirm this breakout, so breakout and then a retest, that level would be respected as a newly found support, and important level that majority of the traders who are sitting in a bullish camp would be keeping an eye on. Potentially opening up the way for the retest of further upside towards 1338, 1340, maybe even 1344 on the upside. So let me just show you what that is. So that area here. Only a confirmed dip lower. So a big massive reversal and a dip lower and something like this developing. So a false breakout, retest from underneath, and then test of this 1330, 1332 from underneath as a newly found resistance would open up the way for the retest of this area down here towards 1324, 1320, 1317 to the downside. But so far this looks very, very bullish for gold. And you know, when you see the size of that daily candle, it's very, very impressive. So the daily candle started from 1310 today, and we are at 1335 almost. So that's $35 in a price move. So that will be equivalent of about 350 points move. So it's a substantial move. It's a substantial move for the gold as well. So from the longer term point of view, bullish traders would be looking at this area here now, the sequence of these slightly lower highs, which brings us to that 1344 area, because that'll be first touch, second touch, and then possibly a third touch up there. So resistance is on the upside, 1334, 1338, 1340, and then 1344 to the upside for gold. Okay, so let me just move this lower. Are you guys looking at US equities like Dow Jones or S&P? Would that be of interest? Because yet again, these markets would be moving, or they are moving, they're impacting by the FOMC as well. So we have a sequence of lower highs here pointing to this current resistance at 24,990, 25,060. And if we open this up, you can see that there's a number of lower highs. We saw this initial sell-off when the volatility kicked in, which created this rising wedge formation, which tested this area up here. And that area up here towards 25,900 is really, really important, because that's a longer term rising trend line in a daily time frame, which was broken. So once the price broke it and tested it from underneath, it became a newly found resistance. So majority of the traders who were looking at that level were respecting it as a significant resistance. And then what happened is the price flushed lower, created a first higher low, and then run into that resistance again. Now we have multiple touches and a sequence of lower highs. So the fact that the price is dipping lower and is dipping lower below this rising trend line now, which is now newly found resistance. So if we go into an hourly time frame, this shaded area was the one that was closely watched ahead of the FOMC, and the levels were at 24,990, 25,060, and you can see that the price actually spiked into that route. So what you're seeing here, this is an hourly time frame. So you can see that price actually spiked into that zone, and it got rejected at the moment. So the important levels to watch from the Dow Jones point of view, the initial support is down here towards 24,712, 24,700 as a major support area, because then all of this becomes a very nice bearish continuation pattern that needs to play out. This basically becomes a mini version of one of these, or a mini version of one of these, and a mini version of one of these. So if we just go back to this, closely watched areas of interest are now at 24,896, followed by a breakout towards 24,990, 25,060. A confirmed loss of this area here, 24,712, and a daily close below, or at least 4-hourly close below that level, and then a retest of that level from underneath as a newly found resistance, would indicate that bears are still in control, and we could possibly see a further downside movement towards 24,640, 24,613, 24,500 to the downside. And these levels would be referenced as a major support areas, because they would be correlating to this longer term previous lows and longer term support areas as well. Okay, do you need me to talk about any of these in a shorter term time frame? So let me just actually ask you. Do you need them covered in a shorter term time frames? Because I'm not really sure how you trade. If you want to go as low to a 15-minute time frame or lower, but the levels are already in play, because, as I said, the FOMC minutes came in today at 6 o'clock rather than 7, because the time difference in US and UK. So most of the time the FOMC is scheduled for 7 o'clock release, and then the press conference happens 30 minutes later, 7:30. So when this broadcast actually started, this webinar started, the news was already published, and the initial reaction already happened. Okay, so let me just go and cover these in more detail here as well. Gold is moving higher as we speak. Gold is breaking out higher. This is a big level. This is a really big level. 1338, 1340 for gold. That's a fairly substantial resistance at the moment. Some traders who are sitting in a bullish camp would likely see that level as a potential profit target zone, and if they decide to cover their positions at that level, it could cause a little bit of a sideways move or something. Confirmed breakouts above that level would likely indicate a further push higher towards 1344, which is a major level there as well. Okay, one last thing before we go. We have S&P. It's very similar to what we were talking about, the Dow Jones as well, but all of this represents a major consolidation range. We have S&P on all-time highs up here. The big volatility came in, and then subsequently we have this sequence of higher highs, but a lower high in relation to this all-time high. So when we are seeing this level here, this level was covered earlier as a major resistance area because it happens to be a 200 period moving average and 4 hourly. It also happens to be a couple of these rising trend lines here as well meeting at that level, and it also happens to be the sequence of these previous lows at 2744, 2750. So that area was respected as a major resistance, because what happened is when the FOMC numbers came in, we saw a spike higher, and then subsequently that was all reversed. So all of this here can potentially morph into a bearish continuation pattern, which would be a mini version of that big one that we've seen, potentially pointing to this support down here at 2713. If that level is lost, and let me just go and put this here so that you know exactly what I'm talking about. A majority of the traders who are trading S&P, which is here we go. Oh, thank you. Yeah, Joshua is saying, do you use any indicators? Yes, I do use indicators, but this is the webinar which is basically just concentrating on the fundamental news that's coming out at the moment, and the way that impacts the price action in a range of markets which are likely going to be impacted by that a major decision, which is in our case Federal Reserve rate decision and then subsequent press conference. So the indicators almost become invalid because the volatility increases as a result of something that's fundamental or a data point. So once the price action settles and we identify support and resistance areas, so basically the fundamental news is the trigger, and the technical levels would give you the ranges or the levels which could be, if broken, either confirmation of the existing trend in your time frame or a trend reversal in your time frame. And then once everything settles and the full daily candle forms, then you can start using your indicators to identify overbought and oversold levels, but you still must put it in a context of the trend. So let me just see. So you are saying, not really. I prefer a longer term. I'm really enjoying it. Thank you. US dollar index is selling off. What could be the possible cause? Or is it a result of FOMC? I'm not really sure if you watched the beginning of the broadcast of the webinar. I'll go back to the dollar index, which is this here. It's selling off because this is dollar index in end of day time frame, and it's painting a really ugly Mirabuzu bearish candle. The reason why it's selling off is FOMC hiked rates, and the vote was unanimous. But the accompanying statement said that they will stick with 3 rate hikes for 2018. I'm not really sure if you've seen the beginning of the webinar. That's what we talked about at the beginning, and that's basically what the consensus was. The market expectations were that we will see the rate hike today, and that we will see 3 rate hikes going forward in 2018. The surprise or a hawkish statement would say we are likely going to hike 4 times, and carry on hiking with this increased rate in 2019 as well towards 2020. The fact that they didn't say it basically caused the dollar to reverse. Normally when you see a rate hike, that's bullish for the currency, in this case US dollar, against the basket of other currencies, all the crosses, but it's also very much impacting all the other financial markets which are traded in US dollars, like precious metals, like energy commodities, and also relating to the US equities as well. So the fact that this is selling off, it's coming up to a major support level in end of day time frame, which is 89.30, 89. If that's lost, then that would indicate that bears are in complete control, potentially opening up the way for the retest of these current lows down here towards 88.40, and that would indicate further US dollar weakness. But a very good question, and thank you so much for asking. Thank you very much for asking. Let me just see if I hope that answered your question. Joshua is saying, what caused S&P to dip 500 points? I'm not really sure. I am sensing that some of you are really new, and it would be good if you have any feedback to call your account manager and basically give them the feedback, because we could possibly have one of these webinars specifically designed for people who are brand new, and this is, as I said, this webinar was specifically scheduled for the FOMC and the way that might impact financial markets. So if you feel that you're not sure about what's happening here, maybe we could have one specifically designed for you, and that's not a problem at all. We can schedule the one for the beginners. But let me just go back to the S&P and finish it off with the S&P, guys. So this here is a major level of interest for S&P at the moment, 27.13. If that level does not hold support, and it's actually a zone of about 10 or so 20 points rather than just a specific number. So all of this shaded area here is hugely important for S&P. So if we see a flush lower and a close below, something like this, then that would be quite likely seen as fairly bearish development, potentially opening up the way for the retest of these lows down here, 26.94, 26.80. And these levels are actually quite important because they would be a measured move from the previous consolidation, so therefore a symmetrical move lower, which gives you a level which also happens to be a significant previous high and low, so therefore horizontal support. And that's what bears are basically looking for. Rejection here is very much centered around those trend lines, which were previous support trend lines, now newly found resistances, and also by these fibs, multiple fibs of 61.8%, and I might confuse somebody now if you don't know what I'm doing, and then also fibs from this swing high to this swing low of 38. So you have 200 period moving average there, you have a cluster of previous significant lows, you have fib clusters as well, and you also have previous support trend lines, now newly found resistances in that level. So that's why we're seeing this big massive rejection there, and that's why this level down here is hugely important. Guys, just to let you know, you're all more than welcome to come and join us in TraderCast. If you want to know how to join us, this is complementary to FxPro clients. So speak to your account manager and ask if you can join us. We do daily broadcasts, about 5 hours from 9:30 until 11, from 1:30 until 3:30 every day, looking at the markets. There's a community, we post stuff in there, and there is also a very nice a research tool that can potentially provide you with these type of analysis ahead of the market. So you can see the levels that will hopefully help you make your own informed decisions. So I'm going to close this broadcast for now. Thank you all very much for watching and listening. Stay safe and happy trading. As I said, opinions and experiences, not advice. And apologies, I have this a new screen plugged in, so it didn't really work as well as I thought. But thank you so much. Well, if you want to see these webinars for the beginners, why don't you call your account manager? I don't know who your account manager is. If you're a UK-based client, you can call your account manager here in London. They're literally sitting just behind this door, and then we can arrange this for you. It's not a problem at all. It'll be a real pleasure. We run these webinars on weekly basis, and as I said, these webinars are a little bit more specific to the market analysis in real time and the economic data that's actually driving them as well. So thank you all very much for watching and listening. Stay safe, happy trading, and I'm looking forward to talking to you next Wednesday at the same time, so 7 o'clock again. Thanks, guys. Stay safe and happy trading. Thank you. Thank you, buddy. You're more than welcome. Bye. Thank you. You can go and register. You need to put FxPro in the promo code. When you come to the payment stage, do not proceed to payment, log out, and then we will activate your account. But we need to check with the guys here. Call your account manager and ask them, do you qualify? And if they tell me that you do, you're more than welcome to register and use the facility for 30 days, absolutely free of charge. Lovely. Thank you, guys. Stay safe. Happy trading. Thanks, guys.